2, and 1. I'm going to keep this in as part of the open. Welcome everybody. Here we go. Welcome everybody to the Investors Roundtable. I'm your host, Robert Kraft. You can follow me on Twitter at Bobby K. Kraft, BOBBYKKRAFT. And I don't even know how to start with the intro for this today because we've just been cracking up already from even as soon as we got on here today. We got Stephen Kiel in a hacienda somewhere. Thomas is somewhere in Europe. We're not even sure. But I'd like to introduce our panelists today. We got Thomas Braziel, 507 Capital. What's up, Tom?
Yo, Bobby. I'm still working on your open. Come on, you need where are you need like a catchy open, No,
it's a BOBBYKRAFT. That's his opening.
Yeah, it's like, are you down with OPP? But are you down with the BOBBYKKRAFT? That's what we're talking about.
BBY. I like it. Okay, we got something around there, but it's like
I think that's t-shirtable. You down with the BOB.
No, you just put that in the front and put it on the Kraft in the back. People might think you're related to Robert Kraft or something.
I'll tell you right now, I do think I do have an idea for a t-shirt. And you know what, I'm going to disclose it right now. Is from Planet MicroCap. I ask everybody, for full disclosure, are you a shareholder? That's like a perfect friggin' t-shirt right now.
That's right.
Oh, that would be great. You got to get the
cool,
merch.
Right?
What is the Bobby Kraft Incorporated's merch revenue stream right now? Come on, we got to get the rev up.
I think it's less than 0 because it just
come on.
I think because it's from the brain capital that's already been expended towards it.
And, how did you get? Wait a minute, before we go on, you can intro me in a second here, but I have a question for Thomas. You're clearly in some sort of Airbnb hotel room there, but it looks like you brought your office chair from London to Italy solely for the purpose of work.
I bought this chair, Amazon Basics, like $150, $120.
And you carry it with you? Did you guys take a ship there? Did you fly with it?
Amazon.co.uk. $150.
So wherever you visit, you have a new chair shipped? That's what you're saying?
No, I bought it on Amazon.co.uk.
And I delivered it to Italy.
Amazon.co.it, excuse me.
I feel like he's hiding something from this chair, he's running a chair consortium or some kind of chair like desk chair empire, and yet we're not being let in on it despite the fact that we sit in them all day.
I know. Well, it's a nice chair. There. I mean, the background looks like. I'm glad you made the bed. But the chair looks nice.
I didn't make it. Someone else made it.
Glad you made your daughter.
I sleep in the bed just on top. I don't even touch the stuff underneath.
Put that on a t-shirt.
Yeah, that's
right.
Put
that on a t-shirt. We should get the merch. Here we go. Right here. Before we move on, Bobby, we got to work on merch. We're gonna brainstorm. I'm not gonna say anything. I might ask for a cut, but we're gonna work on some merch.
Oh, don't worry. Merch is definitely coming. I've been wanting to do merch for a while. We got t-shirt machines in the office and stuff. I mean, don't worry. We're gonna bang out a couple shirts. I'm telling you right now. And we're gonna be in multiple sizes, not just extra small so Steven can show off his, military kind of thing. But anyways, we got Stephen Kiel from Arquitos Capital. What's up, Steven?
Well, 10 minutes in. Yeah, thank you. It's nice to be here. Always good to be with Thomas. I don't know. We can get into this, but Thomas and I go way back. I mean, it's probably been 10 plus years now. When Thomas was in high school.
Yeah,
I think we met at an annual meeting at one of these microcaps. Yeah, but I think we knew each other before then. That was the first time we met in person. It was you, me, Jeremy Deal, a few others. But we'd been talking before that, and I think it was maybe the FNX thing or one of the very early situations, because I started my fund in 2012, and I think you and I talked. I started some managed accounts in 2009 when I was still a lawyer, and I think you and I talked, or at least emailed or something, even before I started my fund. And so here we are. Thomas and I are both on the board of Enterprise Diversified. We've known each other for a long time. We share an office in New York, and he's given me a number of different, very attractive stock ideas, and I've given him entertainment through the years.
Come on,
it's a fair trade.
I mean, I like, I think, there's something to be said for, hanging out with people that it's not about, you don't want to be too tribal, but there's something you learn a lot from interactions with others, and I get a lot out of it. So, it's a good friendship with people that are out there in the trenches and investing capital.
Yeah, absolutely.
Listen, this is why I started a podcast, so I can somehow infiltrate my way into like long-standing friendships, and somehow carve out a friendship for myself within that. So,
there you go. You got to buy your way in.
Yeah.
Everything's transactional.
I guess, is this any indication? Yeah, right. Is this any indication for what our topic is for today? I hope we have some meat for what we want to do. But I think we got a little meat on the bones today. And I mean, our topic, unless you guys want to just talk meme stocks again, because clearly it's all back in vogue today. But if you want, I'll.
I mean, look, it's.
I don't actually know what the topic. What's the topic?
Cut that part out. Well, look, the topic is: did you buy call options on GameStop? Just in case. Just buy front month call options at $50 higher than the current price, just in case next year.
My issue with GameStop. So, if you watch those Roaring Kidding videos, he's amazing.
Who?
I want to meet him.
We should hire him.
Roaring Kidding, the guy.
Willow.
He's amazing.
Yeah.
The videos are great. He was right. It was amazing. Great call. Good for him.
Wait, has he sold any? That's the question, because he ended up buying more.
Nah, he sold. But he did buy more. You're right. But
yeah, I mean, you gotta cash out no matter what at that point, right? I mean, it's at $300 or something. He's worth 40 million, and then he goes all the way down, but be worth like 3 or 4 million. I mean, I think anytime you've got 20 million in embedded gains, no matter what your view is in the stock, you might as well just cash part of that in, right?
I just did
price to value.
It's interesting. I just did an interview with Corey Hofstein that I'll be sharing in a couple of weeks, and we were talking about that realized gain and the risk that comes with when you then eventually decide to sell. And I thought that was quite fascinating. He gets way more academic than I do because he's a genius and I'm me. But it's quite interesting, especially when you start talking about when. Especially with all these meme stocks, when people decide to monetize, or if it's really more of just about the gamification of holding till, I don't know, whenever.
Bobby, whenever you make the comment, because you do this really every week about how you're just a little simpleton, you don't know what's going on. I feel like you want one of us to stand up and say, hey, Bobby, come on. You're a smart guy. Like it's good.
No, I actually would prefer if you went along like, no, yeah, Bob, you're right. You are a dunce. I would actually prefer that.
Well, it's just like Charlie Munger says, it's better to assume you're 10 IQ points lower than you actually are than to assume you're 10 points higher. It's a happier life, it's better for everyone around.
It's also better for your investing. This is the thing is like, I was talking about this earlier today with somebody. We were talking about Bill Ackman, and this person actually knows him. So we were talking about him. And I was like, yeah, I've run across him a few times throughout my career, but just like, casually at a meeting or something. And I've heard he's like an egomaniac, and he is. When you talk to him, he seems very conceited, and it's a cost. It's a cost to him because he's a fantastic investor, but there's a cost to all that ego. So being self-deprecating and being humble about what you know and what you don't know is incredibly valuable. Like you can even monetize. There's just so much value in just being like, I'm not really sure, so I won't weight it as large, or I won't be as aggressive. I think there's a lot of value in.
I just think you guys are too nice. You should double down on my dunceness. It's just stop.
Personal opinions.
Nice.
Yeah, personal opinions are not the reflection of each of the panel members nor the host at any given time. And I will full disclosure, I do own some Pershing Square holdings.
It's so nice to have a lawyer. It's so nice to have a lawyer on the panel today.
I actually like that trade, and let me tell you why.
It's a great trade.
Let's hear it.
SPAC sponsors, man.
This is going to be a terrible way to pitch an investment. It's cheap. He's recently divorced, and so he just had a kid with his new wife, so he's happy. Happy.
So wait a minute. When you say recently divorced, but now he's remarried very soon after and a new kid. So what's the timeline here as you're tracking Bill Ackman's personal life for investment purposes? When was the divorce final? Was the conception of the child previous to the divorce, the finalization of the divorce?
What was the year where he had a really bad performance?
Oh, he had 3 years. It was 3 years in a row, right? And then last year was good.
I think it's like 2018 at the Pershing Square Holding meeting in London. And the guy interviewing him was like grilling him about his divorce. And I was like, is this even like, I don't know, should we talk about this? It's kind of sad. And it's like talking about how he's not in a good place and all this stuff. And I suppose that's good that he's very open about it. But, you know, I think all that bodes well. It's also cheap. It trades under NAV. Also,
the discount to NAV and Tontine, yeah.
Yeah, and you get the Tontine. I don't really understand how the Tontine promote for them works, but I'm sure Steve has.
Well, it's not traditional, you know, so they're not going to benefit to the same degree that some of the other SPAC sponsors are. And, you know, I have a position in Pendrell that sponsored Holicity. Holicity bought that rocket company. The value of Pendrell in and of itself now is like double than what it was before. But, you know, Bobby's just going to drop up $200,000 to buy a share of it personally. I mean, it's the one thing, that's the thing. Bobby always talks about every week. He doesn't own individual stocks because he's so brilliant. Well, he says he's not smart enough to do it, but what he's doing is proving that he's smarter than, you know, this is what I'm getting at the IQ thing. But but what you should do is, like, whenever are we going to talk about Pendrell on this week to week, except for when I'm on, just buy one share. Just buy one share. Probably worth $400,000 a share. The bid, I think, is 200,000. You could probably get it for 250, 300 or so, decent value. They just sponsored a second SPAC called Colicity. So you have to appreciate the alliteration in the SPAC names as well. You know, Chamath just goes, I think, ABCD or whatever, but Pendrell, Holicity, Colicity, what do we got next? You know, there's always another, you know, there's a third one, a fourth one, a fifth one that would be interesting, but they just sponsored that, which will add, if they make an acquisition, that's a big if, it's another $200,000 per share to Pendrell as a SPAC sponsor. So that's very attractive, of course. Pershing Square is a little bit different because obviously the Tontine structure is, and it's larger. But given the, and it's more liquid, and given the fact that Pershing Square Holdings already trades at a significant discount to its NAV, it's all gravy from here. You know, it's a decent investment just at the discount, and then you add in the possibility of the acquisition through the Pershing Square Tontine. You know, why not have a little position in that? I think it's a smart thing to do.
No, I like it. I'm a buyer.
And I own some. Yeah.
No, I don't actually own any. I'm just saying I'm a buyer. Actually, I do own a little bit, but like not enough to make it. But that's full disclosure, Bobby, just for you. Bobby, BOBBY.
Oh no, you did it. I appreciate that. You know, especially when we have our lawyer on the panel today. He's going to make sure that.
Well, I think is it non-material? I think you have to disclose every position, not just non-material positions. As Thomas just mentioned, he said, no, I don't own it. Well, I'd be a buyer, but I don't own any. But then he said he did own any, but it's not material. So, you know, I think you gotta put it out there then that Thomas does in fact own some of a non-material amount. Like this whole show could be a huge disclaimer for an hour. Just that.
I mean, this is technically
why don't we talk about the finer points of
board of directors?
Yeah.
My favorite. So you ever watching crypto videos are always like, this is for entertainment purposes, and then they basically go into why you should buy some token. And I'm like,
actually,
and even some of these shows, like some of them are quite interesting, Bobby, but they don't do. I mean, they do disclosures, I guess, but I don't know.
We just double do it. We double do it because we put a disclosure statement at the beginning, but we like to, you know, just. You never hear it on those shows where they're like, yeah, actually I do own this. I own this, you know.
Oh yeah, that's true.
Actually saying it, you know what I mean? Or not owning it, you know.
But,
well, it's different when you're talking about microcaps.
Yeah.
It's different. You know, Pendrell, like that's very illiquid, but it's like, of course, it's cheap and there's a really good story and you can kind of ride it along if you have fun. But if you're like an individual, yeah, you could buy that, but it's sort of, you know, for an individual, it's a little different. Like I don't really want a whole portfolio of things to worry about. I just kind of want like to do the best things I can find, and then that's it. I don't want like a full portfolio.
Well, what's your favorite? I mean, are you willing to discuss your favorite investment right now, Thomas?
My Lord, you know, the only stock I own is NamTai, and you know that.
just trying to put it out there. I'm leading you. You know, it's like, I mean, you just blew the setup.
You don't even need me. I got nothing to sell. I like it. Get out of here. I like it.
You blew the setup.
You know,
so you own a material amount.
I don't know. I mean, material for me. I mean, okay, I own, I don't know, like almost $600,000 worth.
Okay.
That's material for me because I have most of my stuff.
Is it material? I mean, if you're worth $100 million, I think the materiality threshold is typically 5%. right? So it'd be a $10 million net worth. And if you own $500,000, you only have to disclose it according to your principles if you're above that level.
You own it too, so why don't you tell everybody why you like it, Steve? Come on.
I like it because Thomas likes it. No. I mean, yes, but also other reasons. I don't know, because this thing is going to post tomorrow. So I mean, we'll talk. Do you want to talk about this for a minute? We can talk about it.
Go for
what
it.
Else we have going on. So I mean,
the whole point of this pod was to talk earnings. Here we go. There's earnings.
I don't know how much earnings there are in it, but
fair enough.
There wasn't Q4, but I might not replicate again. Who knows? But no. So I mean, I was familiar with NamTai a long time ago. And in fact, I believe Marty Whitman owned it like 10, 15 years ago or something. Third Avenue, and somewhat familiar with it back then. Never owned it, but Thomas reintroduced it to me last fall, and Izzo Capital, which ironically enough, and I don't want to go on too many tangents here, but ironically enough, Izzo Capital is the activist investor involved in NamTai, and Izzo owned some ALJJ at the time that Thomas and I first probably connected at that annual meeting 7 years ago, something along those like 8 years ago. And so Brian Shee at Izzo Capital there. And I don't know if I doubt he still owns ALJ, but I think he might have been close with Jesseravich there or something along those lines. Correct me if I'm wrong, or don't, I don't care. But the point is we are familiar with Izzo Capital and Brian Shee going back a long time, 7, 8 years. And so he's the activist investor with NamTai. There was a major investment in 2017 from Kaisa, which I don't know how you want to describe them, Thomas, a Chinese real estate development company, or
I mean, they're a very famous
company.
And like Hong Kong developer and mainland China, a little bit of mainland China, but mainly Hong Kong. So they're like they're like a $3 billion publicly traded company, US dollars.
So they put in about $200 million US in 2017 into NamTai at $17 per share and change. At the time, NamTai had documents on their website saying that their development projects led to the value of the company itself at $40 plus per share. This was 3 or 4 years ago. So more recently, Brian Izzo Capital started accumulating shares. They own approximately 11% of the company. They put an activist slate together, and then Kaisa, there's a lot of other kind of details here, but it led to Kaisa eventually doing a private placement to themselves last year at $9.17 a share, I believe, when the stock was trading around 5 or 6 or 7. And the stock eventually came down to about $4.50 a share at the end of last year. But anyway, the reason Kaisa did this was to solidify their control and to freeze out Izzo Capital from successfully calling a special meeting in order to attempt to reconstitute the board. And so Izzo sued. There's a trial in the British Virgin Islands. Thomas, we both followed it very closely, but Thomas, watched it on Zoom every day. And that trial concluded yesterday. The closing arguments concluded yesterday. The results, the judge will make a determination March 3rd. Potentially, then that could lead to a special meeting being called and attempted success from the activists. Now, Thomas has a lot more details to fill in, but that's the high level. And from an investment thesis, from my perspective, is I was buying in at $4.50, $5 a share before the end of the year last year. You say at the very least it's worth what that private placement price was at, $9.17. Now it's somewhere around there today, but also worth at least the $17 that guys put in 4 years ago when the company was saying the stock was worth 40. Now, a lot of several of these development projects are now starting to generate revenue, as we saw in the Q4 results. So there were earnings in there. And so, the value is who the heck knows, but it's several multiples likely of where it's at even now, let alone where it was at $5 a couple months ago. And so that's the general high level thesis. Yeah. And, there's a bunch of special situation things going on there as well. There might be a buyout offer. If Izzo wins and takes control of the board, there could be a number of strategic developments, company specific things, and it's all positive.
Agree.
All right, nothing else to add. It's been a fun podcast.
Listen, I was gonna say, I know. I wish I had more to say. I don't know. I don't know the.
You know what's interesting about the situation is, I think, and I've pitched it to a number of just like that. You guys, you talk with ideas with friends, and the pushback, you're always sort of like heuristical pushback. It's like, well, this is in China. I don't know anything about China, and everybody knows there's lots of fraud. So like, this is probably not real. And I've heard people pushbacks be like, oh well. I don't like real estate development because there's no earnings and like I don't know how to like value it. Okay. And there's like, oh, poor corporate governance. I don't know how to discount that. I'm not going to even look at it. Or people say things like, haven't the Kahn brothers been the Kahn brothers owned for a really long time? Haven't they been in this thing forever? Like, isn't this a value trap? So you get these.
Yeah, they've been in it since 1952. The Kahn brothers have been in it.
Well,
yes, they are in it.
I always think, for myself, I think of like valuation is like, the market's decently efficient. And for me, like where the inefficiencies are kind of on the extremes. So you'll find them in like actually quite safe things can be inefficient in the sense of like getting 5 or 10% for something that's incredibly safe. You think like, God, that's crazy. But there's no natural buyer of it or no natural participant to actually be the other side of the trade. And the other side is true too. Like things are very explosively, potentially valuable, can have a similar quality, which is, I think the market over discounts, or just investors in general, they become sort of lepers. You're not allowed to touch that. Like, you get fired at work. So all the people that I've reached out to or that reached out to me over Twitter or whatever about NAMTI, what's interesting is they're all putting in their PA, but no one's putting it in their fund. I'm like, what's going on with this? Like, why is everybody putting this in their PA, but like they're too scared to bring it up at like, an investment committee meeting or do work on it? I think that's very interesting psychologically. Like, what are we doing wrong here? What's wrong with the industry?
Well, they want certainty. Yeah, I mean, they want certainty. So once the trial is over and the result, well, the trial's over, but once the result comes out for the trial,
right,
that's when they're safe. They feel safe enough, CYA style, to suggest it. When you're in an organization that requires some collaboration and things like that. And this is the beauty of the one-woman investment committee.
Totally agree.
We can make these decisions when there is uncertainty, right? But, as Bono said, uncertainty can be a guiding light. And in our case here, that gives us the opportunity to take advantage of the
quote?
Bono said that, Paul Hewson. And so put it on your t-shirt. Put it on your t-shirt, Elevation Capital. But we can ballpark the downside, right? But this gives us another multiple on the upside because we're getting in before there's that certainty, even though, look, even if Izzo Capital loses the trial, the stock will probably trade higher because there's certainty. I mean, it's worth, Kaiser said it's worth at least 917. So it's going to trade higher than that once the trial's over, at least, even if Izzo loses.
If the private placement goes through, the cash stays on the balance sheet. So the cash from the private placement doesn't. So I should probably just frame this a little bit. So the Kaiser guys, or excuse me, the activists basically came out and they didn't like the land deal that NAMTI did a few years ago. They thought they didn't overpay, but it wasn't that great of a deal. And they were like, why would you do this? Like, you have land that is valued at like 0, and we can make like 10x on that. Why would you go and buy land at market price when the land prices are pretty high? You should be a seller, not a buyer. But then fast forward, they call a special meeting. They got the votes. They need 30% to call a special meeting to, requisition a special meeting under BVI law. And under BVI law, you're also allowed to change the entire board at a special meeting. Under Delaware law, you have to go to an annual. So they had it, and the thing was like a lock. What does the company do? They say, okay, we're not sure if you have the votes. We're going to delay, agreeing to this or not. And meanwhile, we've gotten all these demand letters from our banks saying that we owe them the money. And so we need to do this rights offering so that we have enough capital so there's no liquidity crisis. I don't want to like draw windows into souls and say like the company are bad people or whatever. And we could talk about like, you could just follow the incentives and probably come to the conclusions here. But let's say that the company does win, like you have a lot of cash on the balance sheet. It's almost $200 million. It's a $550 million market cap at 915 or 930. And so, the value of the real estate is crazy. I mean, you're okay, bad corporate governance, yes, but you're buying $300 million. You're buying at about market value or enterprise value of probably $300 million if you accept the cash. And I mean, the real estate's probably worth $2 billion plus. So it's like you're getting a big discount there. Now, I don't know if the stock would go up even if they win, but there's still it's not, you're not going to get hit that hard. Like the downside is quite muted, and yet the upside, if the activists actually win and are allowed to call a special meeting and replace the entire board, the thing, in my opinion, and I could walk you through the numbers, is this thing's easily $50. And you can use different people's numbers, but
I'll use yours.
Basically, use my numbers. Well, I mean, the activists have some very high numbers that they use, and I understand where they're coming from. I think they're right but aggressive, but they're right. I mean, you have to think about like where this land is. It's in the middle of Shenzhen, where the Communist Party of China has basically set out a 13-year plan where they're going to make this into the Silicon Valley of China. Now, if the Communist Party of China is standing behind a region as being the Silicon Valley of China, and yeah, it's not in the beginnings, but I can get on the front end of that and I can get it cheap. That sounds interesting. But it is interesting to me, and I agree with you, Steve. It's kind of back to your point. I don't want to change it back to this, but you're so right. Like, part of the issues with institutional money management is things have to be not only a good idea, but they need to be somewhat safe. Like people are not necessarily, there's reputational issues. There's things that just become uninvestable, not touchable, and risk and uncertainty kind of get conflated, right? Things with a lot of uncertainty people won't touch, even though there's not as much risk as they think given the price they're paying. Remember, it's handicapped, but risk and uncertainty kind of get conflated, and people kind of forget that they're not the same thing.
How'd you guys find this
Bobby?
idea?
What's that?
How'd you guys find this idea? Who found it first? I guess Tom found it first.
Thomas.
I really like this thing called BAM SEC. I don't know if anybody else uses it, but I really love it. It sends you updates on all the SEC filings. I know you can set up like an RSS feed for filings, but BAM SEC is fantastic. We'll put a link in the show notes, won't we, Bobby? They're gonna give us a
t-shirt,
right? No.
Well, wait a minute. Why are we giving away the secrets here? I mean, look. We manage money for other people, Thomas. This isn't an intellectual exercise. We should keep these secrets.
You know why you give it away? Because it comes back to you, man. I'm telling you, like, the more people you talk with, and they'll help your ideas, they'll tell your ideas stupid. Like, they'll really help you craft your ideas. And now, if something's tiny, like, if you don't want to talk, you probably shouldn't talk about pin draw. I'm surprised you even brought it up. But if something is a little more liquid.
Good way to turn it around. But I mean, look, if someone's going to drop $250,000 on a share, we're going to assume they're accredited. But
I forgot it was that much.
Yeah. No, I'm just playing with you. Look, I mean, I agree. There's karma here. We do get it back, and there is benefits to talking, sharing ideas, and getting feedback for your own. As long as you don't defend it, it's not a good thing to get into an argument defending your position. It's discussing the position, because you don't want to psychologically commit yourself to consistency on your position. And so, but look, this is the reason why Bobby has these podcasts, and we talk about these interesting things. And this is why, I think we've built this community of interesting investors and collaborators and all that is. So I'm joking about giving away the secrets, because ultimately the secret is judgment. It's the individual judgment and commitment and discipline.
No, it's judgment.
It's not an idea.
It's judgment, and also there's portfolio management of, like, for yourself, it's like position sizing. Yeah. Watching risk, knowing when to kind of put a little more risk on, take a little risk off, things like that. Like, it takes a lot of judgment. It's really a craft. It's not. Yeah. Not just like, going to BAM SEC.
Let me ask you guys a question. When you guys are talking, you're talking, ideas and whatnot. Have you ever come into a situation where, like, you're an hour into talking about a stock and the merits, one way or the other, and you're finding yourself that, the person you're talking to, it seems like they actually agree with the idea, but the problem is that, and where you really defer, and after that hour, you're like, wait, it was just both of our timing was just very, very different. And that's now why we have a completely different thought process on the thesis of that idea.
Look, you have that in your investors. in the fund. And I run a very concentrated investment fund that can be volatile. And the investors who were here in 2016 and 17 are happy. And those that were joined in 2018, 19 are not, even though on average over that 5-year time period, we've done very well. And since the launch of the fund, full disclosure, not no specific returns, but happy enough. We did well enough that the fund continues, and I'm happy, and I can.
Steve, this is kind of this is a pseudo board of directors meeting right now. I mean,
yeah, it's public, but we should put this on Clubhouse. By the way, we should have a discussion on Clubhouse about Tai, Thomas.
I got Clubhouse on my phone. Can you guys explain to me?
I'm not into it. I'm not into it.
I haven't tried it yet. Bobby, are we following each other on Clubhouse? I don't know.
I have no idea. I literally I got it like maybe a couple weeks ago, and I haven't jumped in any conversations because I have no idea what the heck it is. I feel very behind the times. I feel like I'm finally having like my adult, like past his prime moment. Is that what's happening? Is this like
well, maybe we can get roaring
boomer.
We get roaring Kitty on there and
boomer, get your boomer moment
and have a discussion.
what kids are doing.
By the way, Thomas's response to like now I know for sure he didn't read the topic for today because his response coming on today was crypto. It was one word, crypto. I'm in, and
all right.
The topic was supposed to be earnings, of course. So,
oh, my bad.
Well, he didn't say there were earnings. Like, would there be earnings? There's no such thing as earnings there.
Well, that's what I wanted to explore. I wanted to understand why Thomas said just crypto, one word, and then wanted to come.
Oh, my bad.
No, not your bad at all. I just want to know. I'm curious. I want to know your thoughts.
I mean, what do you mean, crypto earnings?
I don't know, just crypto. You responded crypto. I want to know.
The answer is yes. That's what his response is.
We had the crypto panel. I liked all the people on the panel, and Jeff Dorman I think is super interesting, and all the other guys. And it's interesting to get other people's perspective on the space. I'm like deep in it. Like I've got like a very large distress situation going on in crypto.
Yeah, but you're not owning. This is the difference, and this is where Thomas
but I still own.
is more sophisticated.
I own Bitcoin.
Yeah, but most of your big play, you're not betting. You're not really directionally betting with a material amount of your net worth. You're directionally betting on an arbitrage special situation that involves crypto elements. And so this is what I think I want to make the point to retail investors, not only with crypto, but everything else that's been going on in the market in the last 6 months. Because I got people coming at me, individuals, friends, things like that, some unsophisticated people. Well, it's annoying, because people come to me and maybe they'll watch this and they say, well, look, I'm thinking about getting in the market now. What do you think I should buy? Or I'm going to buy Bitcoin right now. What do you think one way or the other? And it's like, look, why are you buying into it, right? This is, I'm not going to compare it directly to the bubble or the real estate bubble or the tech bubble in the late 90s. But when you got people coming out of the woodwork that you haven't talked to in 10 years that have never really invested before, and they're coming at you saying, what do you think if I put $10,000 into this? And, my response is like, look, I don't know. I don't gamble. I don't gamble with my money. I don't gamble with the investor's money. I'm not interested in that. But you got all of these people doing it at once. Something is up. Okay. This is the question of the taxi driver saying that they bought into, whatever, pets.com in 99 or your barber or something like that. And so
I agree.
Thomas is not doing that is what I'm saying though. No, let me finish though. No, Thomas, okay. You're not doing that. You're doing a special situation that where your downside is understood, your upside is potentially unlimited. Sure. You also have some directional bets, but like what you are doing is 50 times more sophisticated than just go buying Ethereum off of Coinbase or something like that. So I don't want people to think like, oh, Thomas is bullish on like cryptos. This is what we're doing. Thomas is going to make money no matter what. Okay.
Hold on. I am actually bullish, and in full disclosure, I own both Bitcoin and Ethereum and a tiny bit of Doge. It's not significant.
You and Elon.
And I will tell you that it is incredibly risky, and I would never tell anybody to buy any significant amount of crypto unless they fully know what they're doing and they're very rich and they can lose the money. But I would agree with you in the sense of like, that's mispriced bets. I mean, the whole play of that that situation which you're talking about, which I can talk about here if you really want, is Mt. Gox, was we were buying 50-cent dollars with a play on Bitcoin. We were buying basically levered Bitcoin at a very cheap price. And that was the play. And you're right. But I always thought like, oh, if this really works, like instead of making 10x, I will make 40x. That's very interesting. And so it was in my mind, a very mispriced.
Downside's the same. That's the whole point. This is what makes Thomas a professional. Downside is fairly similar in either situation. Upside with what he did is significantly higher in the way that he structured it. And so that's what you do. This is the Joel Greenblatt book.
But you're trying to find the same. You're trying to find the same thing in a stock, right?
But your risk reward is more heavily in your favor than. Now I feel like I'm Bill Clinton. Like you, I'm sorry, but what the way you structure it.
That's security.
That's security. That's right. But you're this way. So when people come and ask us how we make decisions and things like that, like what they should do, Thomas is playing a different game. Okay, and Thomas's game is significantly more in his favor. And so you can't copy that unless you're a professional. You know what you're doing.
Yes. Okay, there are people that can copy it, but yes, I would agree that.
But they've chosen not to. The damn tie situation is what we just talked about. You've laid it out very clearly and perfectly. It makes all the sense in the world to me. Who else is in it? You and me? Who else?
No,
you told all these other people.
No,
yeah, and they're PAs.
I know a lot of people that own their PA.
And they're PAs, but where's the $50 million investment? Yeah.
I know. I agree. I can't get my family office cannot get off zero. But my only reply to those two things is two things. I was telling a friend about some security that had gone up like 15x last year, and he said, and I said, God, I spoke to the guy. I think he might have like gotten into the B club, and he was like, what do you mean? I was like, I think he crossed into $1 billion in this one thing. He's like, Tom, there are a lot of ways to become a billionaire last year. And I was like, it's actually really true. It's quite funny. So that's kind of funny. I think that's kind of, I'm not going Jeremy Grantham and saying like, the world's going to burst into flames at any moment. So that was one thing. But then another is like, this same guy, we were talking about like how best to hedge in a market like this, Steve. And I was like, I don't know. I think probably making as much money as you can on the way up is probably the best way to hedge.
That's true. That's
because
probably
it's
true.
Kind of crazy. I mean, I think things are pretty frothy, but you don't know where infinity. Where is infinity? We're like approaching infinity with some of these valuations, and that's okay. It's okay.
Well, valuations, the word doesn't mean anything anymore. Is the thing.
How do you define it nowadays?
I mean, that's a whole nother.
It's hard. It's hard.
Podcast.
It's hard. I mean, I think it is definitely hard. And I look at like a lot of value managers who are fantastic investors who've had a really hard time in the last like 10 years. Like even, Steve, like only because of special sits have you sort of made it as a fund manager.
Yeah.
Right. If you
the last 3 years,
you would have been slaughtered.
Value killed me the last 3 years. I had a tremendous track record, and then I was down 18, 19, 20. Now we're doing really well last 6 months again here. But, why did it kill me is because I got in, I did not do as many special situation things, and I did more of traditional value, and that killed me the last few years.
Right.
And I missed an opportunity with Thomas a couple of years ago with Belmont. If I would have taken advantage of that, you and I would be, well, if you would have done more options with it, and I would have put it in the fund.
Right now.
Yeah, I was gonna say you're not doing too bad in the hot seat.
Doing all right, Steve.
Yeah, he's doing okay.
Poor Bobby, you got windows. Come on.
Hey, Steve, I know. I'm in my office today. Wait, hey, Steve,
I didn't order a chair. I didn't order a chair to get delivered here in Puerto Rico like you. I mean, once I hit that level, then I'll know. Wherever I go, I just have a chair delivered. Same chair.
You see that chair right there? That chair was made in 1952. Sit on it for about 5 minutes and your butt hurts. Come on, man. You can't work like this.
How long did it take the chair to show up?
I don't know. It wasn't so bad. I'm telling you, Amazon.co.it. I'm sure Amazon's going to eat the world. Software's not eating the world. Amazon's eating the world. It's fast here. You get Amazon you could do they do next day here in Italy.
I got a Yahoo Finance alert yesterday because I didn't see the DG Co meeting, yesterday. I guess
he's talking about Daily Journal, not Doggy Coin.
Yeah,
Or
talking about
Dogecoin,
Daily
or
Journal.
however you
Yeah,
pronounce it.
Crypto. I was like,
yeah.
what crypto?
Yeah.
Which one? Which one? Hold on a second.
No, it was an annual meeting where they got a bunch of they went to a dog park. They got a bunch of mixes together. And,
No, but he said in the Daily Journal meeting, he was comparing something about Costco, comparing something that Costco has that Amazon doesn't. I didn't watch it, but I don't know. Maybe you guys caught something that he said on that.
What does Costco have that Amazon
I don't know.
doesn't have?
I don't know. I was hoping you guys watched it.
Memberships? I don't know.
Yeah,
I watched it. You can't.
Any good nuggets? Fine. Here, this is a better question. Steve, give us some good nuggets from yesterday.
Well, the comments
give us
about Bitcoin are always
listen.
fun. We'll keep the crypto thing going. So I don't know. It can't do things justice here, but you always love his comments about his I don't want to call them cryptic comments, but the comments about Musk and how they won't be following, Tesla into Bitcoin and things like that. Too bad it wasn't live. I used to go every year live, and do love the individuals who ask questions about how to live their life and expect some sort of grandfatherly advice, great grandfatherly advice from somebody who clearly doesn't want to give it.
Yeah,
I don't know. I think we lost Thomas for a moment there, but so what can we do to make some comments that Thomas is unable to respond to?
I don't know. Should we talk about? Actually, you know what? I can say for once, for full disclosure, I do own some Bitcoin.
There you go.
Yeah, I got a little Bitcoin.
Hey, Bobby. Now you're no longer Bobby. Now you're Bobby.
No, but yeah.
Do you want to know? I owned a quarter of a Bitcoin that I bought when Bitcoin was $500. I bought it for $125. I just sold it last year for $5,000 or something like that. But I held it all those years.
And the only reason, football, baby.
The only reason I bought it though was because I was going to arbitrage across the exchanges. Because this was 5-6 years ago when the exchanges all had listed different prices. And I was going to buy some on one exchange, try to get it transferred over and sell it on the other. But logistically, it was too difficult to do. And so I actually had it in a Coinbase account. When Coinbase first started, it was $125. I forgot about it for 3 years. I just totally, was forget it. And this was even, I think, 2013, 14 or something like that.
The best accounts of Fidelity, right?
Yeah.
You know this thing, someone died and the account just stays open and they don't sell and buy and sell constantly.
Well, I should have bought more, clearly, otherwise God knows where I would be.
Hey, Steve.
Diamond Hand Steve.
Yeah, hey, Diamond Hand Steve. Let's go get our tendies, baby. I just learned about this. I just finally understand. And this is sad because I love chicken tenders. So to know that now tendies is a thing.
Now you're switching over to GameStop. I love that video. I think he's genius, man. I want to see if we can go to a collab. Bobby, you got to do a collab with Roaring Kitty.
Yeah.
You think you can get him on?
Maybe. I don't know. I just reached out to Dave Portnoy today via Instagram, just as a moonshot, just to see maybe he'd come on and do an interview with me. I'm trying to pull the angle of Robert, listen, you're going to be doing an interview with Robert Kraft, someone who has the same name as the owner of your favorite team.
Yeah.
So I don't know. Maybe that would work. I don't know. I think that would be kind of
So we'll have him on. Each of us will be we'll take a persona. You can be Robert Kraft, the owner. Thomas, I don't know, Sherlock Holmes.
I like Portnoy, although it's kind of fun. I just hope people don't take it too seriously.
Tom Brady?
No. That's a lot of things.
We got Steve as the international man of mystery. We don't know where he's going to be next.
Oh, God.
Yeah. But hey, Steve, I wanted to ask you this because this is, I know this is painfully obvious to, maybe a few of our listeners here. And also even just amongst us, we talk about, and I know Toby talks about this a lot, because he's a deep value guy, but why did that value strategy get killed? Or why did you get killed in those 3 years?
The companies did well. Companies did well. Valuations shrunk. Whatever you want to do it. If you're talking about book value, price to book, or price to free cash flow, price to EBITDA, EV to EBITDA, whatever you want to do, valuations shrunk. I mean, that's essentially it. That's why when you're in a rising market, a speculative market, that actually has earnings or growth or something like that, you get a double whammy on the upside, which is good because you get multiple expansion and you also get that dramatic growth. And that's how you get those 100 baggers, you know. And on the opposite side here, we had improvement in business conditions, operational conditions for these companies, yet valuations widened, right? So risk decreased. These companies are less risky today than they were, but you know, the multiples are what they are. And I'm not sure, honestly, if they're going to come back. It might be a long time till they come back. If you're talking about balance sheet value investing, because it's a different world, you know, it's a different world. And I don't think the traditional Ben Graham value investing balance sheet kind of approach is, you know, it's safe. You can get reasonable returns, but I think there's probably better areas to be in right now and for the foreseeable future, even when there's a correction.
Can you guys hear me?
Yeah.
No. I think the Geiger counter approach to value investing does not work. Full stop. DFA, not Gabelli. Who's the other guy? Like Royce. Like these guys have just destroyed that. And good for them. Thanks for taking all the cream. And you know, and even AQR and other quantitative shops that just do quantitative value investing stuff. The other issue you have, Steve, right, is you have sort of bifurcation and valuation between sort of haves and have-nots of
yes.
liquidity. So you have this whole world of institutional money management flowing in through ETFs and passive strategies, basically pushing valuations of everything above a certain market cap and up. And then you have everything that, you know, your probably universe is, and even you get better valuations, but the question is like, unless you get it out of the company in cash, like you're not getting a ratings bump unless you could sort of transition. You have like a GARPy company that you bought as a special sit and it sort of runs up into becoming something that is has enough liquidity to be included in the indexes, to be included in like whatever, not just the S&P 500, but you know, the Russell 2000, people's ETFs, you know, and these things really matter because they really push around valuations in the public market. And so you got to be really careful as a value investor. Like you just have to get it out as cash in the business.
Well,
you're
yeah.
dead. Like
there's more reflexivity in the market now than there's ever been, right? And we saw that with Tesla, because as soon as you get that, you know, maybe overvaluation, then they can do an at the market offering, and now that supports what they're trying to create. And that can happen with smaller companies too. And you need that growth now, I think. Otherwise, you just can't invest in some of this stuff. And you know, Soros was right.
I think we're at the zenith of reflexivity. And I think people talk about Tesla being reflexive. I mean, talk about Bitcoin.
Everything is,
like
though.
The most
Everything
reflexive
is.
thing we'll ever see.
Yeah.
Yeah.
Everything is. So, I mean, I think that's the environment we're in. That's where traditional value, balance sheet kind of value doesn't work as well, because there was a reason these stocks trade below net cash, or like they don't have a good story. They don't have those growth prospects. They don't have the charismatic leader. They don't, you know, so occasionally you can find something there that's going through a transition, that there's been an activist getting involved, or there's like, you know, whatever, they've divested something, or there's a special company specific thing going on. So the play is a special situation, the event driven stuff, the company specific thing. The play isn't simply buying a basket of net nets.
So Steve, I'm going to ask a question that's going to sound very like segmenty on CNBC right now. So here it is. I mean, would you say?
Wait, what does that make you, Bobby? Are you what's the guy with the hair? You know, the guy.
Carl Quintanilla? I guess.
Pisani?
Who's like Bob Pisani is no. You know, like the good guy, the guy on NBC.
They're all good guys. Come on.
Oh, yeah,
but the one we like, the one that always interviews Malone every year. What's his name? I can't remember. I'll look it up. Ask a question.
But anyways, all right. So here's our segment then. Transition. Here it is.
First take.
Here we go. This is our first take question. Here we go. Our PTI segment. Is traditional value investing dead as we know it?
Yes, obviously.
Bang. All right, there it is.
Yeah.
Hold on, I gotta be like Tony. I gotta be what's his name? The guy that hosts PTI, Tony. I gotta be like the one.
Tony Kornheiser.
No,
Do you want to debate that,
PTI.
Thomas?
I'm sorry. Around the horn. Tony,
Yeah,
his name is also Tony.
I tend to agree. I think there's a lot more intangible property that creates value in companies. There's still sort of some balance sheet stuff you can do, of course, but I think it's been eaten away by a lot of participants in the market. And our job as value investors is to sort of skate where the puck is and use the tools we have today to do all kind of crazy stuff that you could never do back in the day. And yet still have the overlay of value, meaning what am I paying and what am I getting? And sometimes that can mean a GARPy business. Sometimes it can be a total monopoly that you're getting at, maybe you say 10 times earnings for a business or 10 times EBITDA for business. It's a monopoly, so the value has a lot of, people say value is a big tent. I mean, that's kind of a weird way to put it, but there are everything I'd like to think, someone says, I'm sure people says a lot, it's like everybody should be a value investor in the sense of you should be thinking about what am I paying and what am I getting? And sometimes it looks a little different. I'm sure some VCs consider themselves value investors because some company with a similar product is.
Well, Chamath does.
Yeah, I mean, I don't know. I mean, if he was less promotional and less, sort of.
No, I'm saying he believes he is.
Yeah, I mean, I don't disagree with a lot of the stuff he says, but I think his ego is getting pretty big, and that's fine. Just,
Keeps it entertaining. That's for sure. All right, guys. I know we're kind of close to the end here, so that everybody can go back and doing. Steve can live the hacienda life. Tom can live the Italy life at the going on.
But Thomas is in a basement. He's not even in Italy. I mean, okay, he's drinking a beer. Okay.
Best Italian beer. Oh, you probably.
What is that? What kind of beer is that?
It's a Minabrea.
Oh, okay.
Very recommended.
Why don't you, how cold is it outside there, Thomas? Can you get on a balcony or something next time? This is depressing.
I told you al fresco. I can't do al fresco. The wind will mess up the Wi-Fi. I told you
the wind will mess up the Wi-Fi. That's
the wind.
Yes.
Yeah.
It does make sense. All right,
we should do this again. This is fun. This is good. Always love Thomas.
We should get Jeremy Deal on here too, man. I know.
Yeah, we get Jeremy in here.
I know he loves you guys.
Same Wi-Fi issues. Jeremy's a close friend as well. He's on the board here. You just have a discussion of the directors of Enterprise Diversified. Keith Smith too at any time. Aaliyah Kleinhammer. But the problem is we all have our own internet issues. Jeremy does because in Amsterdam, at certain times of the day, they just shut the internet down. Yeah, it goes in and out. Because of bandwidth issues. Yeah, it's just gets overwhelmed sometimes. Thomas is traveling. I'm traveling here as well. But we've had a good connection here. It's always great talking to you, Thomas, and to you, Bobby. What's the parting remarks? Buy crypto, Thomas? What do you say?
What should be the parting remark? I think
what I think is interesting in crypto, and I'm stealing from Jeff Dorman and other people, so it's like pointless to talk about. But I think that there is a whole slew of potential value investors in crypto. What I mean by that? There's tons of projects out there that trade for, well, not tons, but there are a number of projects out there that trade for either close to or less than the Bitcoin or Ethereum they have sort of in the kitty, and people will look at this and say, well, this is a governance token, so you really don't have economic rights. So what is this? But if you have a governance token, you can always change that into a financial token by the mere fact that you have governance over the structure. And so some of these are very cheap. So like, for instance, I don't own any of this, but I'm deeply fascinated with it. There is an insurance company called Nexus Mutual, and it basically Ciao. Grazie.
Ciao, baby.
Ciao. The name is called Ciao.
He's in a basement in Connecticut right now. This is all BS. I mean, this is all BS. He lives with his mother. He lives with his mother. He's in a basement.
Mama, be down.
Mom, be down.
What's it, Old School? Or no, Wedding Crashers?
Wedding Crashers.
That's funny. That's funny. But anyway, it's Nexus Mutual. It's basically a net, but in crypto. And I haven't bought any. I just think it's deeply fascinating, this idea. Their basic if you're not into crypto, it's a little hard to explain what they do, but they basically do provide insurance contracts on DeFi networks. So if you post your like crypto collateral on a DeFi network and you want to make some interest on it, so you make like 10% or whatever you're making, you might want insurance on if there's an issue with a smart contract around the DeFi, and Nexus Mutual will do that. Anybody can always ping me and I'm happy to tell them about stuff I think is interesting. That's one I think is definitely interesting, because if it works, it's just incredibly interesting. And can you ever buy an insurance net where the growth rate is 300% quarter over quarter? Like, no. Like Lemonade, which just went public, maybe through a SPAC or just been IPO'd, went off like 14 times revenue. If this company went off of 14 times revenue, the token itself would have to quintuple or something. So I'm not saying, I just think that's interesting. I want to think about like, how do we take the craft of value investing and take it into the 21st century? That's one area I think is very interesting.
That is a great topic for another podcast that we're
Ticker?
definitely going to do.
Ticker?
I don't know. It's Nexus Mutual, so it's a token. So if you go on CoinMarketCap,
So you can't. Okay, so got you.
It's a token. You got to buy the token, and you have to be. And there are other things you can do, like you can stake and stuff like that. But if you really want the token, it's hold on, I'll give you the token. What's the token? Oh, NXM. N for Nancy, X for Xavier, M for Mary.
No, it's November.
Oh, okay. I don't know the.
Yeah, Steve. It's?
Oh yeah, you're in the
November.
military. Come on,
Yeah.
Jack. All right,
It's November X-ray Mike.
X-ray. Okay, that
November
was actually
X-ray
really
Mike.
good to know. I used
X
to always
is
say
X-ray.
I like
See, I always
Xavier.
used to say xylophone for X.
That's a little tough on the radio in Iraq or Afghanistan. You got an X-ray. November X-ray Mike.
Okay, xylophone.
You want to go through it? You want to try again? You want to throw out some ticker symbols and we'll turn it into military.
NATO code.
Actually, that was my favorite bit that I think Dave Portnoy did last year. Is he took a Scrabble thing and just pulled out Scrabble. We talked about it on a roundtable.
Yeah.
He pulled out Scrabble. We should do that with just military code signs for the letters. It's just
Yeah.
here's the alphabet. Just throw it out. All right. I'll let you guys go. Where can everybody go and find more information on you, Steve, and then you, Tom?
On Bobby's T-shirt that he'll be promoting at Arquitos.com. Find me on Clubhouse. Stephen Kiel, Kiel on Clubhouse. That's what we're going to promote this week. And if you have any interesting discussions, there was a good interview last night that what's his name from CNBC did of Bill Gates, the New York Times guy. I was his name, but that was good. There was Guy Spear has done some nice stuff on Clubhouse, so shout out to him. There's a discussion, a post Daily Journal discussion there. That was fun. Bring it on. Find me on Instagram too. You want to look at some pictures of PR? Find me on Instagram, Stephen Kiel.
I don't really do Instagram. I do Twitter though. I have to say my favorite thing of the year has been FinTwit.
Yeah.
Twitter has there are a lot of smart people out there. Just
a lot of dummies too, by the way.
There's still some cream.
Full disclosure though, a lot of smart people.
Yes.
If you feel the need to say there's a lot of smart people, that also means there's a lot.
What I don't understand about Twitter
people.
is why do people, the one person that doesn't like you, feeling to come out and tell you? I'm like, okay, well, thanks.
Well, because they get your attention, right? That's the thing. It's like brings trolling to a whole nother level. That are like, oh my gosh, Thomas responded. Thomas, the world famous Thomas Braziel responded. It's like, why do people? Yeah, Elliot, look at these really famous people. Not really, really famous people. Why do people send replies to them? Like, what do they get out of that?
Because we're humans. Because we're human and we want to connect and we want to have
insults though. Yeah, I mean, if you're adding value, that's great. But
I don't know what the insults are, but I thought you meant why do people reply? Why do some people read the negative stuff? I mean, I can't help but read it if someone puts it up. But I don't know why people pile on like that. I don't know.
Well, I know in the FinTwit community, this happens is we'll throw out some, we'll talk about stocks. And then somebody will just say something negative about the company that we talk about, even though they clearly know nothing about the particular company, stock, or situation. But they just will put something like, that sounds stupid, or you're an idiot, or whatever. Like, there's no way that's going to work, or like, whatever. And they clearly haven't done any research at all. They just want to respond, how stupid we are. Which,
and sometimes you may not even get like see, it's one thing if they disagree, and I appreciate when there's dissent. It's just, if it's not backed up by any, at least a response or a take, you're kind of like, well, okay.
Yeah, you can't just say that's, I would never invest in that company, and that's that. Like, well, why? And what is it?
Whitewash that. No curse words. Bobby's gonna monetize this video.
He's gonna edit out every curse. Look, just full disclosure, we've been nothing but like we've been cursing the entire show.
Yeah.
And so if this comes out with no curse words, it's because Bobby edited them all out. He edits out the ums and uhs.
This episode was so good. I'm not, screw monetization on this one. We're just gonna keep it as is.
So when you upload this to YouTube, it is not kid friendly, is what you're saying.
That is like even if it isn't kid friendly, you always say it's kid friendly. Come on, Steven.
I mean, the earlier, it's like a drinking age, okay? The earlier they're exposed to this, the less they'll feel like inclined to take advantage, so it's like in Europe, right? If you drink at an earlier age, there's probably less alcoholism because, they're not binge drinking in college because they've been responsibly introduced to it. So if you're suggesting that some of these words can be, respectfully introduced to like Thomas's children, right, at this age, then there's no reason to edit it out, is what I'm saying.
I only do this because if I don't do these, like if I don't go on YouTube, my little kid's like, I don't know, what do you do? And then she's like, oh my God, you're on YouTube, you're famous.
Hey, can we put this on Twitch? I mean, I don't know. What else do you have? We got Twitch, we got Clubhouse.
Where else do I got to put this?
I want to do live.
You want to do a live one?
Let's do live.
We'll do a
Instagram live. Let's do an Instagram live.
As I will promise, I will do a live one one day, as long as whomever comes on, they make sure to abide by our full disclosure rules.
And Bobby, I've got your tagline. What you're gonna do is you're gonna say it's Bobby. It's Bobby, Bobby, and that could be your phrase. And what's funny about it is it's like, well, how else would you spell it? Like, I don't know what.
Well, there's a lot of it. B-O-B-I.
Okay, we'll work on it.
It's the B-O-B-B-I-E. I think
okay, I guess you could.
Cut that out. Cut that part out and edit it out. I'll work on the disclosure manual. So, we'll have like a 200-page disclosure manual, giving every possibility, and then we'll have that. Everyone will share it. We'll have a quiz. We'll have to have a test before we actually go on the Instagram.
That will be
live.
the whole live. That actually will be the whole live stream. It's just the test on the disclosure.
I mean, let's do it.
This is good content.
I want to do a video. We could do stuff on distressed investing. That would be fun.
Well, dude, I have to. Steve, I haven't done a one-on-one interview with Thomas yet to get his whole investing philosophy. We should do that soon.
Yeah, it'll be 50 minutes of banter and 10 minutes of just golden nuggets. And so it's up to the reader.
It'll be 10 minutes of Tom. It'll be 10 minutes of Tom just be like, "This is my distress."
I'll tell you what. You're gonna upload this right on YouTube. Anyone who got far enough into this and heard the Nexium idea, Nexium or Nexium? Nexium's a heartburn medication. Nexium. So anyone who got that.
Nexus.
Whatever. See, I'm here. I don't even know.
See, anybody
probably a Nexium as well. Frankly, it's crypto. It's probably one of those.
Put it in the notes if you got this far.
That token is going to pump anyway. You know why? Because Nexus is a huge thing in WandaVision. So people are going to hear, "Oh, Nexus," and then they're going to go right and look for the nice token that has to do with Nexus, and they'll know nothing about Nexus Financial, and that token's going to go nuts.
Well,
because it was mentioned in WandaVision.
The fundies, fundies are
so
good.
do you have comments open on YouTube? Put the comments open on this one. Anyone who got this far, because that's a brilliant little nugget here. And I mean, it's a lot of fun to banter, and I always enjoy this. There's good stuff with that. And there's some nuggets in here, though. The Nantai stuff is good stuff. Nexus is good. And so put that in
Nantai's going in the title of this one.
Yeah, well, look, I mean, okay, let's go back. Well, 3 months from now, we'll look back and we'll take our victory lap, or we'll not. Either way. But again, for us, because we bought it like $5, heads I win, tails I don't lose too much. So
I just bought more the other day. So I'm not.
You bought more today. Okay.
$5 price. I bought
a material
just under 9. Somebody's options. Somebody got exercised options, and then they sort of blew out of the stock the moment they exercised. Because on Monday or Tuesday, like 100,000 shares like traded under like very quickly right on the open. So I bought some more, but it wasn't that opportunistic. It was 860, 870, 880. That's basically.
There you go. Okay, we'll take our victory lap in a couple months when it's at $100. I'm joking. I mean, full disclosure. Full disclosure, because don't. We're not promoting this in one way or the other. This is our personal opinion, and in no way are we suggesting that people should follow or do your own research. Don't use any money that you can't otherwise lose. But there are a number of different ways and options to play it.
Stay in school, don't do drugs, do your own research.
All right. I think that's a good place to end it right there. I love that. Till next time, gentlemen. Wait, Tom, where can people go and follow you on Twitter?
It's just my name, Tom Braziel. I think it's just at Tom Braziel, and I have a little website, 507. People, I only want weird ideas. Don't call me with. I mean, nets are cool too, but
look, I got this idea. It's called Amazon.com. The CEO just resigned. There's a special situation going on.
Actually, you say that.
Wait, is there a spin out?
AWS. The AWS spin out could be for real, bro. I'm serious.
I was thinking more of the spin out for the .co.uk.
He could spin out .co.uk. I think he's gonna spin out AWS. I mean,
that'd be interesting.
I mean, I've heard rumors that AWS.
All right, my internet's going out, so that's a sign that this is over.
Right. Yeah.
We'll pick that up on the next one. All right, dudes. It's been a lot of fun. Love it. Good luck. Stay safe. Talk to you guys later. All right. Stevie Money.